All right, hello traders, welcome. It is Monday, April 21st, 2025. Another down day in the market. We had the president really going after the Federal Reserve chairman today for not doing more to save the market, that the tariffs have been tanking. So that's not helping either. So the markets are dropping, gold rocketing up, bonds are in a state of flux and concern with the rates heading up towards 5% again. Just a mess out there. A difficult environment to trade, but not an impossible environment to trade. We had a great week last week in the account. We booked $8,896, so almost $9,000 in realized gains. We booked another 4 grand today, excuse me. So or 2 grand today, I'm sorry. The exact amount today was 2,092 bucks today. So overall, we've been doing well, just kind of trading through this market, not all back in on a lot of trades. Long-term accounts, you're just holding, watching, and waiting, and hopefully adding a little bit and nibbling away as the markets drop. So again, trading and investing, two completely different things. We're going to talk more about covered calls today, though. But in investing, you're buying, you're holding, or you're selling and holding, but you're looking at longer term, high quality growth is what you're looking for. In the trading account, we are looking to generate income and cash flow on a consistent and regular basis. So that's the differences between the two accounts. Most of the time, I'm on here talking about the trading account. Sometimes I will talk about investing, but for the most part, we'll talk about trading, and we're going to do that again today. But I want to talk a little bit about covered calls today because this is a perfect environment for covered calls. Because even though you may be holding on to something, and you can be doing this in an investing or trading account, but I like what I'm going to show you is more of a trading strategy. I like covered calls. I think it's a great strategy. It works really well in a sideways to down market. Less effective, but still effective in an uptrending uh, market as well. And I think when you're combining, aspects of selling naked puts, selling covered calls, taking advantage of volatility and higher IV, this is a great environment to sell covered calls because you've got really high IV, so you can really be generating and insulating your holdings from any sorts of drops like we're seeing right now. So let's get into the market, take a look at a few charts, not much, and then I really want to touch base on covered calls and go through that with you today. So I'll give you some examples of how I'm using them to continue to generate profits while we wait for this market to calm itself down. All right, let's get into the charts here. So we saw the S&P today dropping about 2.41% on the session. I keep either on Twitter and through here, I keep talking about what I call the trend line of death, which is this big, thick blue line here. You're going to see it appearing on nearly every stock and every chart that we talk about. Okay, the trend line is this downtrend line that really started around February 19th of this year and is just held up now for for what, 3 months, so March, April, and now heading into May. So over 2 months, heading into month number three for the trend line of death. And every time we come back up, we failed, we failed, we didn't even get to it this last time, we failed. And every time we've made this run, we've done it on declining volume every single time. Any bounces here have been met with just declining volume. There's not enough bullishness to push us over the peak, and the bearishness takes over, and really we get slapped in the face of some reality with some new Trump trade war thing. And I'm not trying to be political here, because I do believe in tariffs and things like that as a general principle here, but sometimes the way you go about it may not be the best. Okay, but a lot of turmoil in the markets, and a lot of people really hurting, down 15, 20% on a lot of things is not great for someone who's close to retirement and needs that funds. And now you've seen your $1 million retirement account cut down by 200 or $300,000 or something in a couple months. Not great. Long term may be fine for the market, but short term there's going to be a lot of pain. But we've got this little bounce. So we've got these H patterns that we've been talking about here. The first one was this H coming down, weak rally, tipped over and sold off again. Okay. That was number one. Right. Well, now we've had the exact same thing happen a second time. Came all the way down, bounced on weak buying, and then rolled over again. Now, the question is, do we break these support levels in here, or did the support hold, and then do we get a double bottom? And if we get a double bottom, okay, here, then maybe all bets are off. That let's take a quick look. Oops. Uh, let's take a quick look here. But if we double bottomed, down, up, down, and then back up, and then we have to worry about this neckline in here somewhere, which is already indicated on this chart. So if we break the neckline to the upside, which would also be breaking this trend line of death that we keep talking about. All right, so let's clean some of this stuff off the charts and let's get along with it. But a double bottom and then a break of the neckline up here, which I'll extend out, would be awesome to see. And that would also break the trend line of death. And maybe we could get back to some normal sideways to upward market. But you can see on the weekly chart that, 1, 2, 3, 4 down weeks, an up week, 1, 2, and this is a giant down week. Okay, 1 up, 1, 2 more. So you've got what, 8 down weeks in the last 10 weeks. No bueno. But are the bears running out of gas? Well, if you were looking at the markets today, you wouldn't be noticing that. And we just hit 6 o'clock here on the East Coast, so futures market has opened for tomorrow. Kind of a mild nothing burger right now, so I'm really not going to worry about it. But if you're looking at the charts, you can be aware that we've opened it back up. Now, we did finish off of our lows on the day with a pretty good volume move. We could see a little bit of a bounce tomorrow, so it could be turnaround Tuesday, or we might as well just keep going down and get this thing over with at some point here. Either way, I'd love to see a little bit of a bounce here and just stair step it calmly down, get the move up, but we got to break the trend line of death. All right, so there's the S&P. If we're looking at oil, pretty much the exact same scenario here on oil. If we take the trend line and we pull it down, oil's got the same basic trend line of death piece here that oil's been in since all the way back to January 15th. So for even longer, oil has been just struggling, trying to bounce off of these lows right now. I don't know how it'll perform. We've got 112 trades on, which I think is a great 112 trade opportunity because you don't want to have any risk to the upside in case oil does rally, or at least back up to the trend line. But then if it does rally up and then rolls back over, you want to have that trap profit. And right now you can get pretty decent far away, being out of the money. So I think that's a good setup. And I like where we are. A down day today in oil, but really you've had a really nice bounce off of, this 56 to 58 level all the way back up into the low 60s. Nice little bounce. Maybe it fizzles. But it looks like we're coming off of oversold levels on both the weekly and the daily. So we'll see what happens. But I like the setup here for 112. Gold. Now, there's no trend line of death here, but there is a trend line of life, and this thing continues to just power its way higher. I could probably take some of these, some of these things off of here. Let's see if we can get rid of that trend line or that support line. Another one here. I mean, gold's just off to the races, not stopping, and it's opening up even more positive and after hours trading right here. This thing is very overbought and still continuing strong moves to the upside. So gold looks good. I think you could play it, with something that's low risk, high reward, like either buying calls, debit spreads, or even call butterflies. I would not want to be selling puts at these extremely overbought levels if this thing does reverse and the market does decide it wants to make some gains to the upside. All right, let's switch gears quickly to the US dollar. Okay, trend line of death, secondary trend line of death that's even sharper. This looks terrible. The US dollar is in serious, serious trouble. It is obviously oversold, but looking terrible. US dollar is losing its status everywhere. It's dropping heavily. I think the administration did want a weaker dollar, but I don't think this is what we were expecting or looking for. So US dollar, very weak, pushing up the currencies across the world against the US dollar, but going to certainly hurt a lot of different things and leading to something that could break out there with the US dollar continuing to really sell hard here. Looking at that, let's take a look at the bonds. So here's yields in bonds way off of their lows here. You're up to 4.4 on the 10-year and up to 4.91 on the 30-year. So 30-year almost back to its highs, almost back to the 5 percent mark. So yields almost at 5. So bond yields absolutely cranking their way higher. And if we're looking at TLT, it's just struggling here at all. It has been absolutely beat up heavily since April 4th on here, just getting destroyed to the downside. And things don't look great for bonds right now. That's a big concern for me, for everyone else out there, if people are dumping bonds. Okay. Price could be dropping. People are dumping bonds, prices are dropping. People aren't buying bonds, which is even worse than dumping. If China and other countries stop buying US Treasury, what are we going to use to pay the debt? We've got some big bills coming up in the next couple of weeks. Are we going to be able to make that? I think there's some real questions out there right now. Be very, very nervous. I do not like what I'm seeing. I do not like what's happening to the US economy. And all of this is self-induced pain. Okay? None of this is based upon uh, earnings and fundamentals. It's all based upon news and this tariff issue that's happening. So it's causing a lot of short-term pain here. And daily tweets, daily news, attacking somebody different every single day, just not healthy for the markets. Markets are looking for some sort of certainty here and getting things sorted out. And right now, it does not look good. And you're having one branch attacking, not even another branch of the government. But uh, whether you agree with Powell or not, and I've almost never agreed with any of the Fed chairman. Okay, I can't think of one I did agree with. I was absolutely not uh, a Greenspan fan back in the day. I'm not really a Powell fan necessarily either. I was absolutely not a Yellen fan. So I can go on and on and on. Don't love a lot of what they do. However, they serve a function, they serve a purpose. And I think keeping them separate is a great thing for right now. But we're seeing a lot of difficulty. Again, I don't want to be political because I really could care less about politics. Okay, all I care about is my money and trading. And when you start screwing with my money and my trading, that's when I get a little bit cranky. Uh, Even though long term, I think there could be some benefits. All right, let's move off of that and let's go back. So look at bond futures, just not doing well at all. Are we finding some sort of base in here? I don't think I would be willing to put a lot of money on bonds, so I'm staying out of bonds. I have nothing in bond futures at all right now. All right, take a quick look at a few stocks here. Nice H pattern, secondary H pattern forming an Amazon. Amazon just getting absolutely taken out to the woodshed and beat up. Okay? Amazon just getting smoked on a very consistent basis. And after hours, it's down even more. This thing's selling. Death cross back here. It does not look good for Amazon. It's one of my favorite companies. I like it. The only thing saving Amazon for me in my portfolio is I did have a synthetic stock trade on where I bought calls, sold puts at the exact same strike, and I also sold a protective put 20% below that, and that is paying off. So it's really keeping my profits pretty much contained, or my losses contained, I should say. And I've also been writing covered calls, which again, we'll get to that strategy in just a second, is helping me uh, with either lowering your cost basis if you're looking at it that way, or alleviating some of the losses as we go down. NVIDIA looks terrible here. Now we are approaching a important support level here. Looks like, again, after hours, it's down again. We'll see if we can hold this support range in here somewhere between 90 and 95. If we can hold that and bounce, maybe we get our double bottom when we're in good shape. If not, trend line of death until it's broken, just nothing good can really happen in the markets, in my opinion. So until the trend line of death gets broken, and we can actually probably go back further. And probably look at it this way a little bit more. So there's the primary trend line on NVIDIA, and then you also have a secondary trend line, which might be being broken, but then it failed totally. So there you go. So this trend line to me is pretty much still intact, but I'll take it off. Not looking good. Hood, trend line of death, breaking out to the side, still kind of trying to do the H pattern thing, kind of trying it, whatever. Trend line of death, breaking out a little bit, looks better than most other things. Palantir broke out of its trend line, moving sideways, acting totally fine. Google could not break the trend line of death here and continues to fall lower. Tesla, okay, trend line of death. Now this ascending triangle here, or I'm sorry, descending triangle, not looking too great for Tesla. I don't think anything good can come of this. I actually closed out any Tesla positions that I had today with earnings tomorrow. I'm not feeling warm and fuzzy about Tesla. Maybe the fact that it's overdone a bit could save it. Okay, but they're going to have, I can't imagine that the numbers are going to be good because deliveries have been absolutely terrible, even with reduced earnings. I can't imagine commentary is good. Elon's got to start to focus on getting some positive things with this company. I'm just out of it. If it rallies, great. If it doesn't, fine. I'm just taking the L, getting out of this thing completely, and we'll use that money to put in something that actually works. All right, so there we go. I don't want to cover anything else except Walmart here. We are in Walmart. This one did break this trend line of death to the upside, and I like Walmart here. All right, so there we go. A good handful of stocks for you. Let's talk a little bit about covered calls. So covered calls, what do they do for you? Number one, income generation. Okay. I use it as an income generating tool. Now, do I use it in the longer term investing to write covered calls on my longer term holdings? Very little, very limited. Yes, I could be making more money, but I don't want to cap my upside. Okay? So I don't mind, right in this market right now with the trend line being down, it's a good time to write covered calls, I think, against your holdings. In a bullish market, I think it's a no-go on investing accounts. All right. But you can collect premium regularly. It's going to boost your portfolio income. I love covered calls in trading accounts. Okay, especially with stuff that's downtrending or sideways. We'll talk about how we do it. All right. It also provides you nice downtrend protection. Okay. Premiums will offset stock price declines. Okay, so if we sell a $2 covered call and the market drops $2, we break even. So it's offsetting some of those declines. Okay, gives you a nice high probability of profit. The way some people do it, if you're trading like that 20 to 30 delta, gives you anywhere from 70 to 80% chance that it doesn't get breached. However, I like the at the money, so a lot lower probability of profit for me, but more income. We'll talk about that. And you still do get some price appreciation, which is really a key here. So you get the price appreciation, even at the money, I'm okay with the underlying moving higher. Even though I'm capping my upside, I'm okay capping the upside because all I care about to me is the income. I don't care about the upside appreciation in a trading account. In the investing account, I love the appreciation. I want to see the appreciation, so I'm selling further away covered calls most of the time. Also. So a couple quick risk things here. Remember, your upside is capped, okay? But it's okay the way we trade it. I'm not worried about the upside because I only care about the income. Uh, the other risk would be that if you buy an underlying that continues to only decline, now you have a problem because you're going to have to generate a lot of income to offset a lot of declines. Right now, I'm selling at the money. That is my favorite tool. Up, down markets don't really matter. I'm going to sell at the money. I want the premium. I don't care what the underlying does, with the exception of I don't need the underlying going, getting smoked by 50 to 100% down. Okay. I can handle 20% sell-offs, 10% corrections, 20% corrections, whatever. I can handle those things. What I don't want to see is an underlying dropping 30, 40, 50% over the year that we have it. So you got to do it in high quality names. And this is why that video that I did on why I hate the wheel, everybody's missing the point of, oh, you don't like the wheel. The wheel's great. We make all kinds of money on the wheel. Yeah, I don't mind the wheel. I've actually got naked puts sold in my investing account that if I get assigned, I will write covered calls. However, what I don't like, and if you watch the video and any of you paid any attention, I don't like the way people do it on very high risk, crappy names. Okay. I'm only doing it on SPY or something like uh, Nvidia or Amazon, which right now look like crappy names, Walmart, Boeing, something like that. Dividend paying quality stocks is where I think if you're going to do the wheel, does it give you the same juice? No, it's okay. You don't need to make 10% a month on crazy stuff that's going down. Okay. Because if you're in some of these things, you're down 20%. In fact, if we were looking at Amazon right now, okay, from its high, Amazon's down 32%. Okay. How's your covered calls doing now? Okay. Depending on when you get in and got assigned, you could be down 20 or more percent and you're not writing enough covered calls to offset that decline. And then if this thing starts to rebound, you're going to cap your upside and now you're going to be underwater. Okay. Or you're going to have to be rolling forever and rolling out farther in time. So you've got to have uh, good quality underlines. All right. So the way I do it again is I'm selling weekly right now because the markets are crazy and I don't want to be locked in any longer than that. I'm only doing it on high quality names. I'm only doing covered calls right now in the trading account. I've got SPY and I've got QQQ, and that is it. I'm not doing TQQQ. I'm not doing Palantir. I'm not doing UPIC, well, whatever it is. SoFi and all these other crazy names. I'm not doing any of that. I want high quality indexes primarily, and I'm selling at the money. And right now with the volatility, you're getting paid an awful lot. You can be being paid $7, $8, $9, $10 to trade at the money, which could give you $1,000 per contract in a week, $700 to $1,000 a week right now. Now, the market's also dropping. So if the market's dropping $700 or $1,000, you're not making anything right now, but you're also not losing anything right now. So I love the at the money. Now, what happens if we go up, 10 points? If we go up 10 points, okay, I'm going to lose $1,000, okay, because we're going to go up 10 points. I'm going to go in the money by $1,000. I'm going to lose $1,000. However, I'm going to make $800 on my 80 delta or 85 or 90 delta. I could make 800 to 900 bucks on the underlying going up. So that's going to pretty much wash any loss on the covered call. Plus, I'm still going to keep $5 to $10 worth of extrinsic value on the covered call. So yeah, it's going to go in the money by 10 bucks, but I'm also going to make $10 uh, on the extrinsic, or $7 or $6 on the extrinsic. That's I'm still keeping the extrinsic, which is all I care about is the extrinsic value. Okay. So the underlying is going to go up. I'm going to take a loss that's the same as the underlying, and I'm still going to make my extrinsic of 500 to 700 bucks. That's the way I'm playing it. I'm good with covered calls doing it this way in a trading account because all I care about is income generation. Okay, right now I've got 4 SPY leaps that are out there, and I'm writing calls around $5 to $6 a week on those, which means I'm generating around $2,000 to $3,000 a week. And with today's move down, we hit almost an 80% profit on the covered call. I closed it and wrote another one for this Friday. So I'm trying to double dip on this Friday. It's been a great trade paired with the 112 trades, which I just closed one a week ago for over 2,000 some odd dollars. And as well as, so the 112 calendarized trade is doing great in this environment. Okay. We're loving this environment right now. We're generating cash flow on the 112 calendarized trades. It's doing fantastic. We're making money on our SPY and QQQ, poor man covered call at the money, calls where I'm generating cash flow. Those have been just cranking out the cash while the market just continues to slide a little bit lower. And then we've also got little trades on. I've got a gold 112 that's up nicely. I've got an oil 112 that's up. We've got an IBIT, naked put IBIT. Bitcoin is actually up. As long as you're looking at Bitcoin and maybe IBIT as a proxy, MicroStrategy is a little riskier, but it's doing just fine as well. You could do something similar with MicroStrategy. XR, I'm not a big fan of Ethereum at all right now, and XRP, not a fan. Okay, yeah, it's $2, and if it goes up, a little bit, you can make a lot of money on it. To me, it's just gambling on that thing. I don't see any quality in that. But Bitcoin itself, a little bit of flight to safety, just like gold, performing well. See what happens in the markets. Okay, but those are my covered call. Just a little bit of how I'm trading it. We'll get into some more specifics later this week. But the covered call in this environment, I think, is a great way to protect some downside, generate cash flow while the market is searching for its bottom. Okay? Use the trades that the market is giving you to be smart, be adaptive. Okay, and I think you'll do great. So we've generated between last week and today already almost $11,000 just between covered calls, some 112s, two trades out there. So those are all helping out pretty good right now while the market is figuring out what it's going to do with all this news and things that are happening in the markets. All right. So if you got something out of this, click the like button down below, give it a thumbs up. Would appreciate that. So if you get something from what I'm doing, great. If you don't like it, but you're watching, thanks for watching. Okay. But you don't have to follow. You don't have to do anything. I'm just sharing what I'm doing, what's working for me. Okay? And right now, that's what's working pretty well. And I love covered calls in this environment. It's paying off and paying off greatly. All right. Have a great rest of your evening, folks. If you're not a subscriber to the YouTube channel, subscribe. We'll have some more great content coming out this week. See what I'm doing. If you get something out of it, like I said, give a thumbs up. Want to see everybody doing well. Good luck to everybody. Stay safe. We'll see you tomorrow. Bye-bye.